Hello, good morning. It's Wednesday the 20th. I'm FX Blue and this is Market Brief. So there are a few challenges facing the old UK economy which could knock the recovery off track. Firstly, we've got COVID cases. They're creeping up again, and fatalities are at levels not seen for 6 months. Some NHS experts are calling for a firebreak restriction to be introduced, but do you think Boris will back that? I'm not so sure. Secondly, supply chains are still struggling with the shortages of raw materials and spare parts, and continuing delivery issues are holding up the distribution of any imports that do make it through. The logistics sector issues could easily remain in place for some time to come. And finally, the Bank of England seems to have accepted that energy costs will add to inflation. The market seems pretty convinced that the MPC is considering a rate hike to head off rising inflation, and that would be a pretty punchy call without tapering support first. Fun fact for interest rate fans, there are close to 10 million Britons now who have not seen interest rates over 1% in their lifetimes. Granted, they're not exactly going to be the mortgageable population, but it still puts our low rate and loose monetary policy into perspective. But despite any doom and gloom in that outlook, the market is only really focused on the chance of a rate hike, and sterling continues to be pushed higher. We touched 138.35 against the dollar, and 140 may even be within reach before the MPC meeting. This could easily be a classic case of buy rumour and sell fact, though, leading to a pretty sharp sell-off when the MPC doesn't act. But I should underline the small print. That is in no way investment advice. The slowdown in the US recovery is unlikely to deter the Fed members from starting to taper support for the US economy. The Fed is currently buying government bonds and mortgage-backed securities at a rate of about $30 billion a month, and that will likely be reduced to about $20 billion in 2 weeks' time. Supply chains are creaking under the weight of US demand as well, and the shortage of drivers mean hauliers are unable to cope. Housing market data has also highlighted issues with the supply of raw materials as new building permits fell sharply in September, dropping 7.7%. That wiped out the 5.6% gain seen in August. The dollar index continues to slide given the uncertainty over the potential Fed action. We saw 93.50 on the day yesterday, and euro dollar opens this morning around 116.50. Right, that's it from me. Join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.